Hey, this is Travis. I just want to do a follow-up on one of my latest videos where I was sharing my year-end performance, showing you the different portfolios I manage. And this is just an example. One of the portfolios only had one strategy. It was 35% growth. The other one used two strategies. I had 50% growth. And then another had three strategies, which actually is not accurate, which I'll clear this up today, had 65% growth. So what I want to actually do is walk you through the secret to how I got that growth, right? The secret to my option trading success. But before we get to that, for those who don't know me, my name is Travis Wilkerson. I forgot my name there for a second. I'm a former U.S. investing champion for the futures and options division, but I go by Trader Travis online. Quick 30-second backstory here. I grew up American poor, backwoods of Virginia, in a house with no running water or bathroom. And I got lucky when I joined the military. I wound up meeting my first, what I would call my millionaire mentor. And so he taught me the secrets to how he built his wealth. And it was real estate. And then I went bankrupt, right? Then it was like, I gotta pay off all this debt. And then my buddy was learning about stock options investing. And then he introduced me to his millionaire mentor. And as they say, the rest is history. The stock market investing, aka option trading, is what allowed me to achieve financial freedom when I was 34, even despite my previous failures. And now it's my mission in life to share those secrets with you, right? Hopefully you can achieve financial freedom. It can be done rather quickly if you truly are committed. The plan I was taught was a 5-year plan. But if you are not as diligent, like I was in the beginning, I wasn't diligent, you still can do it in about 10. And it seems like a long time, but it goes by pretty quick. Think about it. Most people work in corporate America for 30, 40, 50 years and then end up hardly with anything, living off Social Security. And this is a plan that he taught me where I can achieve financial freedom in 5 years. Worst case, I become a millionaire in 10. And that's not that bad because, again, most people work their whole lives and never become millionaires. But that's not the point of this video. What I want to do is, Peter, one of my most successful members, had commented on my previous video here. And it was basically, I was showing one of my gamble accounts where I lost half of the account in a market decline. And so he pointed out that my performances or my averages with the proven blueprints I teach in my trading programs are the same in strong bull markets as well as weak ones with big corrections, right? Now, most people would not know that. Only members of my training program would know that. Like, how in the heck can you get consistent performance in up and down markets, right? Up markets are easy, but down markets are usually what destroys people. So how is that? How do I get the same returns? Well, that's what I want to show you today. I call it a secret. It's not really a secret. There's really no secrets. It's just things that, other people have figured out that you haven't. But what I want to do is walk you through that, and hopefully you can see why I'm successful. If you are not successful yet trading options, right? You've been struggling. Hopefully that will solve it. I won't, it's not fair for me to teach like exactly how to do it because people paid a lot of money to my training programs to learn that. But I'll give you the big picture overview. And if you're resourceful enough, you can figure it out, right? You'll see exactly trades and I'll walk you through the big picture. But again, let's come back here to this video because I want to show you what I said, the 3 strategies are not really accurate. So let's come here. I prepared it on a Word document here. And I'm going to start off with a spoiler alert. The secret to my consistent performance in up and down markets is I buy lots of stock insurance and I focus on not losing a lot of money. I could care less about gains. Now that is counterintuitive. Most people are like, what? Like, how could you not care about gains? I literally, the times I'm the most successful is when I focus on risk first, profit second, right? Here's why. Let's pull up a stock chart here and let's pull up the S&P 500. This is a 5-year chart of the S&P 500 using Market Club. It's a stock trading software I use. It's not mine, but it's a third-party software. Gives you entry and exit signals. You can look at these and see. Here's another reason. This is one of my secrets I didn't plan on covering, why I'm able to win so much. Market Club gets me out before the market takes these tumbles right here, right? But anyway, just look at this long-term chart. Don't get distracted by the trade triangles. Look at this long-term chart. What does the stock market do? Now I'll put it on max, not 5 years, but what does the stock market do over the long term? Most people know this. It just goes up. It's very hard to screw this up, right? The only way you can screw this up is if you do something stupid, right? And I know because I've done a lot of stupid things, but look at it. It's really hard to screw it up. Just stick your money in it and then don't do anything stupid. And you look 5-10 years later, you should have a lot more money than you started with, right? So easier said than done. So how in the heck can I prevent myself from doing stupid things? First, again, I have these trade triangles that will warn me to get out. That's one way. But the reason I record this video is because, again, I buy lots of stock insurance, and that's what I want to show you here. So I told you the 3 strategies, 65% wasn't accurate. It's actually not. So here I just showed you was slightly inaccurate. I didn't think about it till just now, which is why I wanted to record this video. So the 1 strategy portfolio is actually 2 strategies. The 2 strategies are buying options or selling options, just 1 strategy plus cash. I consider cash a strategy. So cash would be the 2nd strategy. And I will walk you through an example of what I mean by that and why I consider cash a strategy. But regardless, 1 trading strategy, it was 1 trading strategy. The 2nd strategy was cash. All right, 2 portfolios, market cap options where we're just buying options, and then cash flow where we're just selling options, 1 strategy. So 35% return for cash flow and 21% return for market cap options. Both of those were 1 option trading strategy portfolios. All right, moving on here. So the 2 strategy option trading portfolio, the 2 trading strategies were buying options and selling options. Same 3rd strategy here, which I did not cover, is not cash. It was actually stock insurance. So 3 strategies, buying options, selling options, and the 3rd strategy was insurance. So when I added another strategy, it bumps up my performance. And here, this last one is actually not 3 strategies, it's 5. It's buying options, 2 selling strategies, buy and hold, and then insurance, right? 65% return. This last one right here is the one I will cover because it will make the point, but I won't share all 5 strategies. I don't need to. I only need to cover 2 strategies to make my point. So here it is. It's the 1 stock blueprint. It's 5 different strategies all in 1 portfolio. I started with 60 grand. I'm going to start off with the one that people struggle with the most. Coming back here to the Word document, what did I say? I buy lots of stock insurance, right? I worry about not losing money. That is the secret that keeps me from being stupid, right? When the market falls, I don't lose a crap ton of money. Said another way, when the market falls, my emotions are not triggered. It's the triggering of the emotions that causes people to do stupid stuff. Everybody knows the market goes up in the long haul. I mean, everybody knows that. But when you're looking at your portfolio and half of it leaves in the market crash, like, it is normal to be completely terrified because you never know if the market is going to recover, and you're watching the news and everything else it's increasing this negative head trash. Well, I have learned that I haven't found a way around that. The only way around that is don't put myself in a position to lose a lot of money. And then my emotions are not triggered and I'm less likely to do something stupid. I can just stay in and ride through like the bear market of 2020. I rode through it because I started making money after a while, right? All right, and I'll show you and I'll explain that here looking at the Excel. All right, so I'll start here because this is what people struggle with. This is a $60,000 account. I put $16,000 of it in stocks, insurance, put options, right? So 16,000 is about 27% of my 60 grand starting balance. Now let me ask you, would you start off putting 27% of your account in put options? For those who don't understand put options, they lose money when the market goes up, and they lose a lot of money. So 27% of my account is in something that loses a crap ton of money when the market goes up. But you'll see how this works out. And as you can see here, the different dates, I'm just rearranging. As the market went up in 2021, I'm just readjusting. So the market goes up, I buy insurance at a higher level. I bought insurance at 410. The market went up, I bought insurance at 465. And here you see I bought even more insurance. Why? Look here, I bought another put to increase my risk. Pay attention to that. Most people want to increase risk without earning the right to increase risk, right? Put 6 grand in your account in something that loses money when the market goes up. Yeah, it'll give you a little gut check, right? But I have earned the right now to increase my bullish risk. Bullish means trades and strategies that make money when the market goes up. See, I'm balancing everything out. I want to earn the right to take more risk, so I bought more puts. Here you can see I'm closing down the portfolio roughly a year later, and I'm tallying my total loss. So I lost 12,000, almost 13,000 just on my insurance. So that's a 21% loss based on my starting value of 6K. Not looking good so far. You're like, how is that a secret to success, Travis? You're losing money. Remember, I said I'm not going to show you all 5 strategies. I'm only going to show you 2, because only showing you 2 will make the point. Here's the second strategy of the 5. I bought what they call Buffett call options. Well, I call them Buffett call options. For those that don't know, Warren Buffett trades options. A lot of people are quoting his quote about options are weapons of mass destruction. But if you read a shareholder letter, he trades options and has made billions doing it. So it's one of those things, do as rich people do, not as they say. And so anyway, I devised a strategy around the way he trades options. And so in honor of him, I named it Buffett Call Options. But anyway, that's not the point I was trying to make. The point I am trying to make is I invested about $6,000. Note, I can only lose $6,000, but how much of my insurance did I start with? I put $16,000 in something that loses money if the market goes up, but only put $6,000 in something that makes money if the market goes up, right? That doesn't make sense. It's counterintuitive, which is why all the people who are brainwashing you about option selling is better than option buying and all this other stuff, you will never discover this because they are brainwashing you and keeping you in a little box. You have to step outside the box, test new strategies, throw a lot of things at the wall, and then you will learn stuff and discover things that no one else teaches online, at least that I've discovered. I'm always looking for, cool teachers on YouTube I can refer you to, but it's so much crap that's taught out there. I just haven't found anybody I trust yet. Anyway, all right, so let me show you why I can get consistent performance in up and down markets. And let's cover the up markets first, and then I will circle back and cover how I can get consistent performance also when the market crashes. All right, so here's what I did with my call option trades. I invested $6,000. For those who have followed my public 3X growth strategy case study, I used about $2,000 to start with. About 4 months later, I had a 71% return on my money, right? And that's about on average. Usually I can double my money with call options in about every 4 to 6 months, all right? So now let's circle back to the Excel because you see the same thing. Bought them in January here, about 4 or 5 months later, what happened? All right, I wound up cashing out for a 10 grand profit. Then I reinvested that 10 grand profit, right? So did I have 10 grand at risk? Yes and no. Technically I did, but I only started with 6, right? So 6 grew to 10. Then I wound up investing that 10. I think I put a little bit more of my own money to it. Cash out here for a 50% return because I wanted to change everything over to what they call index call options. I won't have time to explain it, but they're cash settled. There's no early assignment of stocks. You get better tax treatment, et cetera, et cetera. So basically, I took a $6,000 investment and parlayed that to the point where I could put $24,000 in my call options. At the end of the year, I made $24,000 on call options alone, right? So that was a 41% gain on my starting balance of $60K. So $24,000 profit minus the $12,000 I lost on insurance, I'm still ahead, right? That is how I get consistent performance in up markets, even with all this insurance, is that the bullish strategies I'm using are making more than what I'm losing on my insurance. Now, what about consistent performance in down markets? I just showed you up markets. Up markets are easy. Well, look here. Remember, how much insurance did I start with? I can only lose $6,000 here. I have never, to date, fingers crossed it never happens, but I have never lost 100% of the money I invest in these call options. When the market crashes, if we're using Market Club, when we get out on a red monthly, matter of fact, let me just show you here for a visual. We just had one recently, a correction, a 10% correction. We got a red monthly, right? When I cashed out all my call options, they were down about 50%, and that's about average. So I'll round this up to $6,000. So in a market crash, the most, or what I typically lose is half of that. So that's $3,000. But how much insurance did I have? I had $16,000. If anybody has ever traded puts double in value super quickly in market crashes. It is ridiculous. Why? Because coming back here, sorry all the clicking back and forth, but it'll make sense. All right, see how the market goes up, but when it, no, let's come back to the bear market of 2020. The market went up from about July 2017. See, it kind of goes up slow, has meanders around, it goes up, but when it crashes, there's a crash slow or there's a crash fast. This was like a 30% decline in 1 month, and it fell so far. This was March of 2020. The price it fell to prices that were traded back in 2017. So 3 years ago, right? It took 3 years to go that high and only a month to go that low. But the point I'm making is that when that happens, put options, if you have put options in your account, they will go up in value so fast. It is not uncommon to double your money. 16,000 will turn into 32,000, which meant I will have a $16,000 profit. Will a $16,000 profit offset the little $3,000 lose on my calls? Yes. Not only would it offset the $3,000 I lost on my calls, it will also offset the other money I lost on the other 3 strategies I didn't show you. And that's why I said I don't have to show you all the strategies. I just show you 2. It makes the point. I have a ton of my money in stock insurance or put options so that if the market ever crashes, I sell my puts for a profit. It completely wipes out whatever I lost on the other strategies. That is how I get consistent performance in down markets. And in up markets, again, as long as you don't do anything stupid, I already gave that lesson, right? As long as you don't do anything stupid, you can make money. And you can see that here. It just works the way it works. All of my bullish strategies usually out-earn whatever I lose on my insurance. So this video was a little bit longer than I wanted it to be, but I'll circle back to this video because I also gave you the secret to my success in this video about minute 9:50 something in 10 minutes, right? It was a secret to my option trading success is to risk less money. So I'll end with an example of that because I told you I would come back to this 2-strategy example. All right, let's come back to the Excel because this Market Club option members will understand this. Again, look at what I started with call options. I had a $60,000 account. Let's pretend I didn't use 5 strategies. Let's pretend I only used 1 strategy, buying call options. I put roughly 10% of my account in call options. I was able to parlay that and end the year with a $24,000 profit or a 41% gain. Now pay attention to something. I used 1 strategy. I only invested 10% of my account, but my entire account grew 41%, while 90% of my money stayed in cash. What do I say? The secret to option trading success is to risk less money. Options are leverage. You can double your money. Well, if the market cooperates and goes up, right? On average, I've doubled my money every 4 to 6 months. I don't need to bet my entire account on trades, right? Because the risk of loss is just not worth it. I could lose everything if the market corrects. But I can invest 10% if I lost everything, which again is rare. It hasn't happened to me. But think about it. Only 10% of my account is at risk. I could lose 3 or 4 of these type of trades and I'd still have 60% of my account left. But that rarely ever happens if it hasn't actually happened to me. What is common is I invest 10%. I'm able to double it, compound it, reinvest my profits and my original investment. I'll walk away with these type of gains while keeping 90% of my money in cash. Now, for those who have joined my programs, you've seen this so many times, and it annoys the heck out of new members, right? They're like, Travis, you got all that money in cash. You should be doing something with that cash. And every time they say that, I'm like, yeah, you can always tell newer investors versus seasoned ones because seasoned investors know the risk of trading options. They're like, nope. It is going to stay in cash because when the market corrects, what did I say? The secret to how I've succeeded is I make sure I don't do anything stupid. Now, if 90% of my money is in cash and we have a market crash or a bear market, does Travis freak the heck out? No, 90% of my money is in cash, right? What did I say? The secret to succeeding with options is to make sure your emotions aren't triggered that will cause you to do something stupid. When emotions are high, intelligence is low. You saw that when a certain president was elected, and I'm not going to say who because I don't want to start any fights here. All right, that is it. You take care, and I will see you in the next training video. Bye-bye.